What's good, Wagman? Today I'm going to be making breakdown analysis on gold. Now this analysis is going to help you project your market setup along the right path. So let's make this analysis. But before we do that, make sure you hit the like and subscribe button on this video. Let's go. Now this is gold 3 months. I'm starting this analysis on 3 months because I want to see important key levels. And this is an important key level. We have an imbalance right here on 3 months sitting. And if we zoom in clearly, you can see how this market rejected, right? Swept the low of this candle wick. And after that, the next candle is inside bar. So we might not see it clearly on this 3 months. Then we drop down to monthly time frame. On monthly time frame now, you can see the candle range we are looking at, and inside of it we have an inside bar. An inside bar, if you don't know what it is, it always shows you undecisive direction of the market. So what I mean by undecisive direction of the market is that it might sell and it might buy as well. So in this case, since market is already bearish, I'll be paying attention to see where that pullback ends, and then possibility for sell to happen. Why? Market is currently bearish, so I'll be expecting something like this, and then continue the sell, tap into that fair value gap we have there, and then possibility for it to come back up. This is what we are seeing here on higher time frame, monthly. Now with this, we drop down to weekly time frame. On weekly time frame, the first thing we are going to investigate here is our ABC structure, which is SLP, structural liquidity POI. And in this structural liquidity POI, we can see that we have a break of structure here, and we also swept a low here before that break of structure, making here our A, the protected level. So after the break of structure, we had a pullback. And after this pullback, markets went all the way to this high and then started rejecting. So this is our B, and this is our C. Now expectation is for markets to now come back, sweep that B, mitigate it to a POI on the A level and start buying. So what is the POI right now on the A level? This happens to be the POI on the A level. And you can see market has already mitigated there and is reacting from there. So now with what we have, markets made that pullback, tapped into that POI first, rejected, and then still came back again deeper into the POI. And that's where market is currently reacting. So as I go down right now to lower time frame, what I'll be paying attention is to find out where my entry for the buy can be, just for the short-term buy. Because this market might not buy all the way to take out this C because of what we've seen on the monthly time frame, and on 3 months time frame, it's telling us that there is possibility for market to continue selling. So I'll be taking short-term buys until market says otherwise. When market aligns bearish, I will be also fast to execute the bearish direction as well. Now, since we have this on the weekly time frame, we are going to now drop down to daily time frame, focusing on the current structure of the market. So remember, now as you can see on the daily time frame, this is exactly the same thing we had on the weekly time frame, which is the POI level, the A protected level where market is currently reacting from, right? And in this case, we're just going to focus here. We're going to focus where the reaction is currently happening. Now market is reacting from this POI, and as it is reacting from this POI, we've seen a change in market structure, showing us that market is now going bullish, right? So now this pullback is where we are going to start expecting markets to buy, and that's where we are going to position ourselves to take the buy. And where is going to be our target? Our target is going to be this high, because this is the next liquidity that market is expected to come back and take out. Now with this information, I'm going to drop down to 4 hours. Now dropping down to 4 hours, I'm going to be looking for protected level so that I can know where exactly I'm going to put my stop loss, right? Now this is the protected level. This is where the change in market structure shifts happen. So this low is protected and we're expecting it to hold. And right now, market has also come back to mitigate another block that was created after that change in market structure occurred. Now this is the other block, market has already mitigated it, so I'll be dropping down to 1 hour to see a more reasonable entry for the buy. Now on 1 hour, this is what I have on 1 hour. On 1 hour, you can see the other block that was mitigated, and now after that other block was mitigated, another shift in market structure occurred. Right now, me paying attention to this, all I'm seeing is I'm seeing this low as a liquidity, so I'm expecting markets to come back to it again and then mitigate this same low right here. I'm gonna put my stop loss here, and then I'm expecting markets to come back, mitigate here, and then start the buy right there. So this is where my TP is gonna be, like I said, above this particular high where we had our draw liquidity sitting from higher time frame. So this is my analysis here. This is my forecast for the week. Now, if this analysis add value to your trading career, make sure you hit and like the subscribe button on this YouTube channel.